All right,
Crazy.
Tim, let's keep going.
No, I was just curious. Like one of the biggest complaints about this area that I hear from founders is there's not enough money. We need more access to capital. Is that something you hear? So Brinc is all over the world at multiple locations. Is that something that you hear at every location, or is that something that is specific that just a lot of people say it here in this region?
Well, I mean, it's really clear that there's a process and an evolution of how innovation ecosystems start to have that first kind of risk capital, which is what we normally would bring. I mean, and before us, it was Techstars, 500 startups, like whoever, right? Y Combinator, they stayed in the valley and they sourced everyone to them, and they did not ever expand, right? They tried to China and then they shut it down. So there's only been a few of us that have really said, "Hey, let's go out." And now there's a ton, right? I mean, in the U.S. at least, it's super prolific. But if you just look at cities and you say, "Okay, what would have exited there?" Right? In the Hampton Road, or sorry, I can't speak for all of it, but the things I know, right? You've got Landmark Communications, you've got Northrop. Is it North? Not Northrop Grumman. What's the other one? Starts with an N. You've got the
New,
port. You've got Dollar
Newport News
Tree.
Shipbuilding.
Yeah, like you only have you have
Yeah.
like 4 or 5 that were like
Yeah.
your big businesses, right?
Yeah,
And
four
they
Fortune
made
500 companies, give or
right. They made
take,
these
every couple of
families,
years. Yeah.
and then those families invested in a ton of like real estate and philanthropy and whatever else, right? And not many of them have gotten into the super high risk, early stage venture tech, whatever, right?
Mm-hmm.
Yeah.
So if you look at the valley, I mean, the valley's in like what their
70th
I think
year.
yeah, but I was gonna say
It's
generational. I'd say
fourth
it's
generation.
fourth, yeah, fourth, or it could be even sixth if you look at it a different way. But let's say it's fourth, full cycle, right? Of companies get exited, boom, and plant seeds, and this has continued to happen, right? And then if you look in Europe, Europe is sort of completing their like second, right? So though even Europe is still behind massively, right? China is probably starting their second, right? And so if you just like use that as like a world kind of perspective, and then you zoom in further and then look at towns like in North America, you saw like the pops in the big cities, and then it went to like the Denvers, right? And then the Austins. I mean, Hampton Roads is not a logical place, right? And so I think that's where you see stuff like Rise of the Rest with Steve Case, which I love what they're doing, but like they're not doing the first checks, they're doing the follow-ons, right? So I think it really takes a long time to have that kind of cycle move,
But
because
that
our
cycle,
first
do you even see that cycling happen? Because I feel like, I've been doing this since 2010, so it's 11 years. Those people that you mentioned, I don't think are actually writing those checks in the way that you're saying that they are in other areas.
No, I was just going to say that. So
Yeah.
so that generation never came into this world, right?
Right.
Like they stay doing, and a lot of them have done great things for this community for sure, like full stop.
But old school style stuff.
That's right.
Real
That's
estate
right.
plays. Absolutely. Yeah.
Yeah, exactly. And so, and what they've done is small. So I was meeting, with Jerry Miller the other day, and so with what he's super into this, and so is a couple of other people like Dreyfus and some others, right? There are people that are investing in these higher tech companies. The challenge that we have is scale. So we don't have a lot, right? So even if you look at 7x7, the Lighthouse, like they're not just pulling, which I've always said they shouldn't have, because you can't just work, focus on local teams. But they're now expanding and getting deal flow from other areas, right? Like I'm talking to teams that are in Richmond, but they're really in Seattle, and I'm talking, the customers are going to be in Seattle or whatever. And so or Boston. And I think that's great. The fact that those teams are starting to find value to come here, I think is critical. And so I think that the life cycle and that sort of, whatever you want to call it, the feedback loop or whatever we want to use, it takes time. And so that's something that when you talk about like having capital, that's been something I've been really trying to push people's buttons on. There are people doing it. There's not a lot. Certainly there isn't enough capital, period. But we also can't just assume that the teams are going to come here. So I think we've got two challenges that, I continue to try to have conversation about, which is we need to circle the troops, get as much money off the sideline as we possibly can here. And there's got to be new ways of doing that versus the only the existing structures. But to do that, we also have to define who the hell we are. And this is something that Hampton Roads has really struggled with, at least in our world, right? Not from the shipbuilding world, not from the whatever world. Like those people know why the military contracting, like that's very clear, right? But when it comes to all these other elements that we talk about early stage, let's say, software enabled technology, because I do hardware as well, but let's say software is the kind of unique component versus like ship hulls, right? Or like wind turbines. I think that there's just not even remotely enough of a pull effect right now, because our messaging is all horizontal. It's just stage early.
But why not?
Right?
Why not double down on those things that are all around water, right? The tourism, military ports, those are all three based on water. There's all technology in that. Like, why not play in there and deep dive into that? Because I do think that we never talk about water, right? And then even if you're talking about something in the water from a Pharrell perspective, tourism, like I do feel like water is that thing that you can do. The beer scene, right? Everything has to do with water. Feel like you can pull stuff out of that market around that, and you would have that pulse that you're looking for and still have ties to an area that other places don't have. But it sounds like
sure, and you do have to go deeper. So there's four areas that I've kind of identified, and for Hampton Roads, and they're different in Richmond. But my perspective is it's going to have to be port and logistics, because we have some real strength there, and that's a vertical that makes sense. We already have logistics accelerators at Brinc, around the world, and there's lots of different governments and corporates that have talked to us about doing more in this space. I think that's a logical one. I think kind of health. I didn't know this at first. I thought this was going to be a Richmond strength, but I didn't know how strong Centera and EVMS really were. And I've been very impressed the more I've learned and the work that Kevin and the team is doing. Like, I think, you'll be surprised in a year to 2 years what they do. I think that's going to be really impressive. And we hope to be a big part of that. And they're starting to work with 757 a little bit too. So I think, the health side and medical side. The third, I think, is something that I did not know, but I love this because we are the world's first drone accelerator program. We did that with DJI overseas, and they thought we were too early, but we proved they've got a lot of deal flow. Not drones in particular, but autonomous systems. So when you look at what's going on at NASA and Jefferson, and there's something very interesting that, again, would not have dawned on me, but when I think about the type of talent that we have in the military that comes out of NASA that is connected to the intelligence communities, there's something that I think could be really interesting there. That plays
what is it, unmanned aerial systems or something like that?
Autonomous systems in general. It touches on a lot of things. We've had lots of investments in air, water, ground, autonomous robots, etc. But so that's one. And then the other one that's a harder nut to crack, but that touches on what you were saying a little bit. So Brinc, my business, we've been powering and backing the Rise Resilience Accelerator for the last program or challenge for the last 2 call outs. So, we're actually about to just launch a $3 million challenge with them for rural and urban climate or coastal city resilience. And there's some element that's, I don't think the positioning's right, but let's just use the word resilience for now because it's the language we have. And that's more than just water. It's a part water, but it's also part, electricity and having that, which is going to play into the Dominion offshore, wind energy, which is actually way more important than I thought it was. Like, I didn't know that in America, we don't have this industry. And so that's actually amazing that, Hampton Roads has a shot at that. And so I think that these verticals all have amazing for-profit opportunities that young startups would love to come participate in. But, we've had this constant struggle of, what's our narrative, what's our brand, playing well together, as you all were talking about. And so that's been one sort of the antagonistic, whatever you want to use it, like instigator roles I've been trying to play for the last year and a half. Is just like pressing on this button and saying, look, we have literally built, 15 accelerators in 9 cities and countries around the world. We are scaling to a huge scale. Like, we'll go to 60 or 65 accelerators in 25 countries, over the next 5 years. And I personally was doing that groundwork. Like, I was in the air 200 days a year. So I've been going to 25 countries a year on average, to go help find these deals, open these markets, see what's up. And we have opportunity. We really do. I wouldn't say that. And personally, it's like, I'm sure you all know all the kind of shticks, but I always find it's interesting when you look to invest in founders, like they need to have personal experience or like just be obsessed with a problem, right? Like, it can't be a nice to have, and I can't kick the fact that there's something here. Like, and this is on top of all my other work that has nothing to do with this area, right? And so I continually find myself coming back to do these types of podcasts, to have these meetings, to talk to these founders. I just think like there's something here. I haven't cracked it. I don't know the answer yet, but I have a sense that it's thematic, it's vertical, and it's for profit. And those are some of
Well,
the areas that I think we should focus on.
and to circle back around in terms of bringing a lot of this together, the other issue that we have with all this grant funding and not-for-profit stuff is that all this money has timelines, and they want to put timelines on how fast these businesses need to be, to one, attract them, two, to grow them to get the return that they need. And it's like we're trying to mash these two things together. You can't put a timeline on growing these businesses, or else the funding's going to run out. And then reporting on everything with all the grant funding and everything else, it's just things they have to happen in their own timeline.
It has to be more patient. And I think
Right.
I've only heard Venture South ever say it explicitly, although I'm sure there's some other structures, but they said, look, we're very honest. Like when we give you money, we want it back in 5 years or 4 years or whatever the number is. And certainly you can always punch out in the next round. You can do a secondary. So there's ways to get your money back, but like, at least in the world I'm from, that's not common, right? Like it's sort of 10 years as your minimum horizon, right? And it's actually crept up to now kind of 12 and 15. And I think that there's a lot of new technologies, especially in DeFi and Web 3.0, that we're looking at to help create liquidity earlier, which may help, increase the risk capital that comes into this market, which may help this community. but to flip it on its head, which this is something I've struggled with, is even with those themes, like let's say I want to build an accelerator or fund in one of those themes, which is our normal model. We build accelerator programs backed by a fund, so there's continuity of capital. There's usually, you got to have 3 checks is sort of like the minimum. You've got to have that first, which is usually, friends and family plus an accelerator or whatever. And 757 and Lighthouse and all that can come in there, and then or within that relatively similar time frame. Then you need that follow-on check, which is like, cool, we now know kind of what we're doing. We need to spend some money to push it. And then you need we actually know what we're doing now. It's time to like finish it, right? Like finish R&D, get your first paid proof of concept or pilot program, whatever it is, start generating revenue. And so it's not always that way, but it's something like that. It's 2 to 3 checks in the first, give or take, let's say 2, 3, 4 years, whatever it is. Some teams go faster, slower, but like, let's say it's an average. And if you don't have that continuity of capital, which we realized the hard way, Y Combinator took a decade to figure this out. It took them 10 years to raise their first follow-on fund. Or I think they call it the actually it might be continuity fund. I forget the word, but whatever it is, $1 billion. And so on our experience, we started raising our first fund, 3-4 years in, because we realized we didn't want to wait that long. And as you see these teams get that first check, friends and family, let's say it's NRV or it's, right, whatever there's a group I just talked about in the South, I forget already. But the point is they're vulnerable because now they're not in an ecosystem, right? And this is around the world, not just Hampton Roads. When you're not in a mature risk capital ecosystem, then those teams now are at high risk. So they could have the best tech, they can have the best team, everything could be right, but they are physically not in a place where there are enough shots on goal. We always tell our teams you're going to pitch 100 times, to raise every round. It's not always that, but it's kind of an average. And so
this is getting at the area does matter type of thing, because you have to have those shots.
Yeah, you have to. There's no way around it, right? Like you cannot. Happy to be wrong in this, but like, show me 25 companies that raised every dollar they needed in Hampton Roads. Like I think you'd be hard pressed.
So that's why people need to go to other areas historically, maybe even
right.
now.
And so then this is the theory that I've been trying to figure out, which I'm happy to say it publicly because I need help and I don't know all the answers for this. Is so. I feel good that I have the access and I've got enough positive feedback that people will back me in these verticals, right? To bring Brinc to Hampton Roads, totally possible. And I also think the people on the ground that want this type of innovation to some extent will back those verticals, right? Might be a little hard because some of those are government, but like you can get enough done, I think, where you could create a really good reason to come. And that's something that, we do professionally. And I always think it's a little funny looking backwards because Y Combinator sourcing companies in the Valley, from in the early days, that wasn't that hard of a sell, right? The Valley was already the hottest place on earth to be, right? So that was like full stop. Didn't really matter. It was obviously early. They were the first to build this whole model, Paul and Jessica. But it's like that was a no-brainer, right? Now flip it, and then you look what we've done. We built our first office in Hong Kong, and then it was Guangzhou, China, and then it was Bahrain, and then it was Poznan, Poland, not even Warsaw, like, Poznan. And then it was Kochi, India, not Mumbai, then we did Sydney, Australia. Then we did Dubai, Singapore, Barcelona, like, places that like logically someone from London, New York, wherever, Toronto, San Francisco, they're not thinking like, oh, I have to go to these cities to do my job, right? Or build my business, right? So we've been doing this successfully for a long time, and it's because we feel very confident in the value proposition. What I call it the magnet. Like, why are you going to go to a program? Why are you going to go start either a legal entity or look at that market for customers, or follow on capital, or even an M&A opportunity, or whatever it might be, or grants? There's lots of good grants overseas for teams. You don't have to physically be there to get them. So why would you do that? And so that's the kind of question, I'm flipping the script here to Hampton Roads and saying the same thing. Like, I think building that narrative in all those verticals whereby, even a company from New York City, right? Or if we talk about, resilience, the Netherlands, right? Or we're talking about the port, we can talk about, Antwerp or Belgium somewhere, or Haifa in Israel. Why would these companies say, hey, I kind of know what I'm doing, or I think this makes sense. Why am I going to come there? And I know it's digital now with COVID, but eventually it won't be. And, the proposition of that soft landing and support they need, and the true stuff that we're going to give them, right, to come do their best work here, it has to be created, that value proposition. And then the hardest part, which is the part I'm struggling the most with, is the money. So I feel confident you can get the early parts of this capital, right? Like, you can put a little bit of money to work. The problem is that the fund sizes in this region are minuscule. So, like, I think there's been a couple of funds that are like 25 million or something like that, in from like below DC, right? I'm sure most of you would understand, and if founders are listening, you don't understand this. This is always something I try to push people on is, if you're going to raise capital from, anyone in the venture capital community, it really is important that you understand the basic economics of how venture capital works, because you're learning about your job usually in your business and as a founder, but you aren't thinking about the job of the person giving you the cash, because they're not a bank. It's, different and well, same, but different. And so the reason I bring that up is $25 million like can barely support 2 to 3 staff, right? It's a rounding error in terms of capital. And so it sounds like so much in this region, but I've been pushing everyone to say, like, look, if we're not talking about $100 million per vertical, like, it's a non-starter. And it doesn't mean you can't get started, but it is so hard to create enough momentum and to build enough of a magnet. So by definition, that means we can't raise all the capital here, which is where I'm struggling, right? Is I feel confident you could probably get enough smart business people and people that care about Hampton Roads to pony up a good amount of cash, not hundreds of millions per vertical, but a good amount of millions. The problem with that is that we're going to have to match it with other outside capital. And that means, in a good way, this is the whole crux of the topic, right? I don't think any of the founders on this really give two shits about the problem of Hampton Roads ecosystem building, but whoever is listening live, it'd be interesting to get your thoughts on what you really care about. But this is the crux of the issue. Can I take a theory, let's just call it the port, right, and logistics, and I can get, let's say, 10, 15, $20 million locally, and then I need to go raise another 80 from somewhere else. Can I convince other people that this is a hot enough of an area and that we can really attract the best talent in this space around the world to come here and give them a place to set up and go? Because if I can't, they're not going to be interested in this deal, right? They're not going to be interested in bringing new capital to Hampton Roads in the risk side of the game. Certainly, we've got plenty of people bringing in stuff for offshore wind, for the hardware side, right? We've got plenty of people coming in for the port and building ships and building bridges and all this other stuff. Like, that's great. That's not what we're talking about, right? Like, we're talking about a different audience. And that part is like the kind of apple that hasn't dropped for me is, can I convince an institutional investor or ultra high net worth or family office and say, look, I need $20, $25 million from you all because I'm going to find the hottest shit logistics and, whatever, maritime, whatever you want to call this, teams. And we're going to give them the best place on earth to do their job and build their businesses. So we'll see how it goes. But like that part's, jury's still out for me.
In your mind, money.